Okay guys, so in today's video we are going to do financial analysis, so make sure that you stay tuned, watch until the end, because guys, in this video, before I start with calculation, I want to give you a background of understanding, so that when you answer the question, you will never have any problem. All right, guys, when we talk about analysis and interpretation, and interpretation we have a four category. In other words, we are analyzing the outcomes of income statement and a balance sheet. Okay. In other words, we don't just prepare a balance sheet and say, our business is nice, our business is making profit. Once we identify everything after preparation of income statement and balance sheet, we have to analyze and see, is there any improvement? Guys, we don't see improvement just because the profit has increased. What if the profit increased but our expense was very high? So we can't determine by just looking at the profit, né? We have to do analysis and interpretation using the ratios. Okay. Hey guys, here we have three category that I want us to discuss about. Okay, category number one, guys, we call it a profitability. So under profitability, guys, we have a different kind of ratios, né, that we have to discuss. All right, ratio number one, we have what we call gross profit on sales. This one obviously is determining how we have improved in terms of percentage when it comes to what, to a sales and the gross profit. Okay, the second one, we have a net profit on sales. We also have a net profit on cost of sales, because we also have to measure if our cost of sales are being well controlled. Because guys, if you spend more money when it comes to cost of sales, you're not going to make a lot of profit, because you have spent more on cost of sales. The third one, even though we're not going to do all of them, I think the last one we can pick operating expense on sales. Okay, when we said operating expense on sales, guys, this ratio is going to help you to see if you have well controlled your expense or not. The more the expense, the more the company is having a problem. Guys, in order for company to make a profit, your expense must be lower, your sales must be higher, which means that if this percentage of this one is very high, guys, there is something wrong. You have to improve your business. Okay, the second category is liquidity. Liquidity. Okay, under liquidity, let me write it properly. Liquidity. Under liquidity, guys, this one, we want to see if the company will be able to pay a short-term liabilities. We want to see if company will be able to pay short-term liabilities. Okay, remember, under profitability, guys, let me also write here profitability. We just want to see if the business is doing efficient on profit. if the business is able to control their profit and they keep improving, we have to see it through this. And this one, we want to see if we're gonna be able to pay our debt, our short-term debt. Short-term debt, guys, remember we are talking about a debt that we have to pay within a year. Okay, for example, we have a current ratio where we compare current assets is to current liability, and the second one we have a acid test ratio. Acid test ratio, guys, we are checking if we will be able to pay our short term without what? Without inventory. In other words, we have to subtract inventory and see if inventory, in other words, are regarded as a acid, because, guys, if you are selling a bread, after a week your bread will be expired. You can't say you are paying your debt by expired bread, you know? It's not gonna make sense, and they're not going to accept it. Okay, the next one, you also have to know the ratio like debtors collection period, even though we are going to do this one on part 2, and creditors, because they were not here on this question paper. Creditors collection period, we have a stock turnover rate, and we also have a stock holding period. When we talk about debtors collection period, guys, we want to see how long does it take for us to collect to a debtor. Normally, guys, you have to collect within 30 days. Once you find that the answer here was 90 days, how you guys, you can't borrow someone and the person pay after 3 months. It's a lot, you know? Our businessmen have to have a good cash flow. They must receive money so that they will be able to operate. So a good one is 30 days or less. Creditors collection, how long is it going to take for us to do what? To pay our creditors. Guys, we must pay them within 30 days. If we pay them after a long time, we are going to have a problem. Why? Because they are going to charge us interest if we pay later. Stock turnover rate. When we say stock turnover rate, guys, we are saying that how many times do we stock in our business in a year? If the stock turnover rate is lower, which means that if it's 2, which means that you stock after 6 months. If it's 1, which means that you stock once in a year. It's not good, guys. You have to stock many times to show that your stock are being sold multiple times. That's why you keep stocking a new stock. Stock holding period. How long do we hold our period, our inventory in our business? If you are holding a stock for a long time, it's a problem. Why? It's showing that you are not selling the stock. It's still there in the storeroom and you are not selling it. So it's not good. Né? Okay, now we have to go to example quickly. Some of these we are going to continue with it on part 2. Okay, I will post part 2 under Accounting Solution SA channel, guys. So just make sure that you also subscribe on this channel, Solution for Accounting Standard, because I'm going to post other videos. Né? I'm going to post other videos on this channel, so you have to make sure that you also subscribe to it. Okay, now let's check our question paper. You are provided with the information related to nota closing for the year ending 31 December 2023, and together with the corporate figure for 2022, the business is owned by partner Nombeko and Thandi. Okay, 4.1, calculate the following financial indicator for 2023 and show all the calculation and round off to the nearest answer. And once they say round off, guys, you're going to get some commas somewhere. 4.1.1, percentage on under operating expenses on turnover. This one is a profitability. We want to see if we are controlling our operating expense properly. Okay, the information is there. Our operating expense for 2023 is 512. You have to know the formula, guys. 6 foot. Remember the formula said operating expense divided by sales multiplied by 100. Operating expense divided by sales multiplied by 100. Our sales amount is 3,213,000. The answer here, guys, is going to give us 15,96. Is it good or bad? We have to compare it with the one for last year. We're gonna do that when we go to the right question. 4.1.2 acid test ratio. Okay, under acid test ratio, guys, we have to take our current assets and we subtract inventory is to current liability. Our current assets, guys, here it was 430 560 minus inventory of 357 660 is to current liability of how much? Current liability, it was 201 150. Okay, we must first get total this side, which is going to give us 72 900. 72 900 is to 201 150. Okay, this side is always 1, guys, and this side you have to say this divided by this, and it's going to give you 0.36. This one divided by this one, it's going to give you 0.36. Okay, let's proceed to the next one. Debt equity ratio 4.1.3. Debt equity ratio, we have to check the information. Its non-current liability is to partners equity. Okay, our non-current liability, guys, it was 380 is to partners equity of 496 610. Okay, this side is always 1, and when you say this one divided by this one, it's going to give you 0.77. Okay, now let's proceed. Okay, the next one is 4.1.3. Once you have a formula, guys, this is going to be very simple, né? Okay, the next one, they said return on average partners equity, 505,160 is our net profit under income statement that we need to start with, because this formula of return on average partners equity, guys, it says net profit divided by average partners equity. So it's gonna be 505,160 of net profit. Once you don't know the formula, guys, it's a problem. I hope that you have a formula sheet on your site so that you are able to compare with these answers, né? Because formula sheets are normally given in your examination. Okay, now let's add up. When we said average equity, guys, average equity, well, let's look at the partners equity. We have to check the one for last year and the one for this year. You add them together and you divide by 2. Okay, let's add them together. It's 496,610 plus 273,500. Okay, when you add this together, and you get the answer. After you getting the answer, guys, you must divide them by 2. Okay. If don't do mistake on this one, guys, I repeat, this plus this is gonna give you the answer, and the answer that you got, say divide by 2. The answer that you got, put it here, you will be fine, and then multiply by 100, and it's gonna give you 131.19%. Just round it off like this. Okay, very simple, very simple. Okay, the next question, guys, it says comment on the liquidity. Remember, I did example which one is liquidity, which one is profitability, which one is solvency. Okay, comment on the liquidity position of the business for 2023 and quote one financial indicators. Let's do so. 4.2 liquidity. Okay, in overall, guys, the business is facing a problem when it comes to liquidity, because if you check from 2022, let's start by current assets, current ratio. Current ratio from it has decreased from 2.2 is to 1 in 2022 to how much? To 2.1 is to 1 in 2023. There was a decline. And when it comes to acid test, let's see what happened, guys, under acid test. Under acid test ratio, guys, it was 0.7 is to 1, and it declined to how much we got? Where is it? This one. It declined to 0.36 is to 1, guys. This was very bad. From 0.7 to 0.36, it showed that the company is not doing well when it comes to liquidity. They will struggle to pay a short-term liabilities in the future. Okay, the next question, guys. The next question, the business changed their policy with regard to the profit markup from 2022 to 2023. What was the change in policy, and what are the risks in regard, and what effect did this change have on the business income? Okay, let's check the markup. Percentage gross profit on sales. Their markup in 2022, guys. Their markup in 2022, it was 40%. But now in 2023, it is 50%. This showing that they have increased their markup. Guys, to increase the markup, yes, you are going to get a group profit, but in the future, this is going to have a problem. Why? Remember, once you increase the amount of selling price, some customers, they are not going to afford it anymore, which means that this can have a problem. But let's check our profit. Last year in 2022, it was 3 million, and in 2023, it was 3.2 million. Okay, so which means that in this case, they managed to adjust a better markup, because customers are still buying, and the net profit also, you can see that it has increased. But in the future, this could affect what? The business. Guys, once you increase the price, some people are going to run away. They are going to run away. Imagine if our tutorial classes from 100 rand, we just decided that, hey guys, I want to buy a Raptor. Now the tutorial are going to cost 300. Some of you are not going to afford it. 300. It's gonna be too much, especially for those who are attending 4 subject. some of you are not going to afford it. But if we remain 100 rand, some of those who were not even attending, they might end up coming, and we got many people. Rather than to increase what? To increase a price. Increase the price sometimes is not a solution. So that's how this question paper was simple, like that. So watch part 2 also, guys. I recorded part 2 and I upload them same time under this channel and under Accounting Solution SA. Just subscribe to both of them, guys. They are going to help you a lot, especially if you are still going to do accounting many years, because now we are improving. We want to also record for tertiary level and also everywhere, so that accounting will never be a problem to any student who is studying anywhere. I will see you on the next one, guys.